I once watched a young trader walk into a brokerage office with more confidence than capital. He had just made his first $1,000 in the market. To him, that single win felt like proof that he had cracked the code. He strutted into the room, chest out, eyes bright, already imagining the fortune he believed was waiting for him. But the market has a cruel way of teaching. Within weeks, that same young man was broke. The confidence that lifted him so high shattered like glass. What destroyed him wasn't a lack of knowledge. It wasn't even the system he used. It was his own mind. That trader was me. And that's the first lesson every trader must learn. The enemy isn't the market, the enemy is inside you. Most traders fail not because they lack information, but because they cannot face the truth. The truth is brutal, silent, indifferent to your beliefs or hopes. It does not care what book you've read, what strategy you copied, or how certain you feel. The truth is written in price and action, and if you ignore it, you will be eliminated without warning. I've seen it happen countless times. Fortunes built and fortunes erased. Men and women enter the market with excitement, with dreams of freedom, and they leave it with regret. And the reason is always the same. They violate the principles that matter: discipline, risk, and patience. The hardest part of trading isn't finding a winning setup. It's controlling yourself when everything inside you screams to do the wrong thing. When fear freezes your hand. When greed whispers, "Hold a little longer." When pride refuses to let you close a bad position. I know this because I've lived it. I've made and lost fortunes. I've been on the mountaintop and in the gutter. And through it all, I discovered the patterns never change. Traders enter with emotion and exit with regret. They chase noise, ignore logic, trust strangers, and turn away from the one thing that never lies: the tape. This is not a game of predictions. It is a business of execution. What you think does not matter. What you do is the only thing that counts. So listen carefully. What I'm about to tell you will not comfort you, it will confront you. But if you're willing to face it, you will put yourself among the rare few who survive. Because the truth is simple. Most traders fail. But you don't have to. When I look back at my early days, I realize the most dangerous moment in a trader's life is not the first loss, but the first win. That small victory plants the seed of overconfidence. It whispers, "You've figured it out. You're special." And that whisper has destroyed more traders than any bear market ever could. I remember a man named Harris, a fellow I once traded beside. He hit a string of lucky wins early on, and the profits made him believe he was invincible. He doubled his size, then tripled it, ignoring risk because he thought the market owed him consistency. At first, the money poured in. He bought himself a new car, spoke loudly about his system, and laughed at those who warned him to slow down. But when the market turned against him, he froze. His ego wouldn't allow him to admit he was wrong. Losses piled up, and instead of cutting them, he held on, waiting for the reversal that never came. Within months, the car was gone, the account was empty, and so was his confidence. What ruined Harris wasn't lack of intelligence. He was a smart man. What ruined him was the illusion that early luck is proof of skill. The market punished his arrogance, and it did so without hesitation. I've made that mistake myself. In the bucket shops, I thought I was a master. Quick executions, small stakes, fast wins. They gave me the illusion of control. But when I stepped into the real market, the truth hit me like a hammer. Execution was slower, spreads were wider, and the tiny edge I relied on disappeared. My capital evaporated almost overnight. Not because the method failed, but because I didn't understand the rules had changed. That's when I learned one of the most important lessons in trading. Confidence not backed by structure is just exposure. The market doesn't care how right you've been. It doesn't recognize your past success. It doesn't reward your ambition. It only reacts to discipline and risk. If you can't control your actions when tested, the market will strip you bare. This game is not about proving yourself right. It's about surviving long enough to keep playing. The traders who make it past the first year aren't the smartest, they're the most disciplined. They learn quickly that a small win can teach nothing, but a painful loss, if studied carefully, can save a fortune in the future. So if you've just tasted your first victory, be careful. That sweetness hides poison. Early success is not proof you've mastered the market. It is a trap, one that has claimed countless traders before you. There's a saying I've carried with me. The market is never wrong, only your position is. Accepting that truth is harder than it sounds. Most traders cling to the idea that the market is mistaken, and that time will prove them right. But the market has infinite patience. You don't. I once met a trader named Alan. He built his career on meticulous research, spreadsheets filled with ratios, and hours of analysis. He prided himself on being rational, a man of logic in a world of chaos. Yet logic betrayed him, because when prices moved against his carefully constructed thesis, he refused to yield. He said, "The fundamentals are solid. This dip is temporary." He was brilliant, but brilliance doesn't stop a margin call. His downfall taught me something I wish I had learned earlier. Being right and making money are not the same thing. The market doesn't pay you for your opinions. It pays you for managing risk while you hold those opinions. This truth stung me during one of my first large trades. I had analyzed everything: earnings, news, even the sentiment in the papers. I was certain my stock was destined to rise. And for a while it did. But then came a sudden downturn, swift and brutal. Instead of cutting the loss, I held on, convinced the rebound was just around the corner. Each day the price sank lower, and each day my hope grew weaker. By the time I admitted defeat, I had lost far more than I could afford. What haunted me most wasn't the money. It was knowing that I had the chance to walk away earlier, but pride kept me chained. The great irony of trading is that survival comes not from fighting harder, but from surrendering sooner. It's the ability to say, "I was wrong," and step aside before the damage multiplies. Weak traders think surrender is failure. Strong traders know surrender is protection. Every loss carries information. Every mistake is a teacher. But only if you listen before it's too late. That's why I always say, cutting a loss is not admitting defeat. It's paying tuition for the education that keeps you in the game. Alan didn't learn that lesson in time. His account vanished, not because his ideas were poor, but because his pride outweighed his discipline. And pride in trading is the most expensive position you can hold. There's another trap that swallows traders whole: the hunger for action. Many believe the secret to wealth lies in constant movement, buying, selling, chasing every flicker of opportunity. But the truth is colder. In trading, patience often pays more than activity. I remember a man named Carter, a floor trader who lived for noise, speed, and chaos. He thrived in the pit, shouting bids, elbows flying. To him, silence was unbearable. He once told me, "If I'm not in the market, I feel like I'm missing the train." That mindset made him a prisoner of motion. One year, I sat on the sidelines for weeks waiting. Prices were erratic, the signals unclear, the risk too heavy. While I stayed still, Carter plunged into trade after trade. His energy was admirable, but his account dwindled with each needless bet. By the time a true opportunity arrived, he was too beaten and undercapitalized to take it. I seized the chance, and it paid handsomely. Carter? He had nothing left. That moment etched a scar into my thinking. Not trading is a position. Silence can be a strategy. The market rewards those who wait for their pitch instead of swinging wildly at every toss. Patience, though, is not natural. The human mind craves stimulation. The flashing screens, the tick-by-tick movement, they trick you into thinking action equals progress. But in markets, frenetic action often equals decay. I once sat across from a young man in a brokerage office. He was glued to the tape, buying and selling in bursts, sweating with every move. His hands shook as he filled orders, desperate to feel alive. Hours later, his account was nearly empty. He turned to me and whispered, "At least I tried." I didn't have the heart to tell him the truth. It wasn't courage that emptied his account, but impatience. The strongest traders are often the stillest. They know the market's rhythm is like a tide. You cannot force it to rise on your schedule. You wait, quietly, until the current aligns with your plan. Then, and only then, do you move with conviction. Patience is the mark of discipline. Impatience is the mask of desperation. And if you cannot master the art of waiting, The market will teach you the cost of rushing. Discipline isn't built in moments of calm, it's tested in storms. And storms in trading are inevitable. Prices collapse, rumors spread, panic fills the air. In those moments, the market whispers into your ear. Abandon your plan. Just this once. I remember a night in 1907, during the panic that gripped Wall Street. Stocks were crumbling. Men in expensive suits screamed in the corridors, begging clerks to find buyers. Some wept openly, their fortunes slipping through trembling fingers. Fear spread like wildfire. The temptation to act rashly was overwhelming. I had positions on, but my plan was clear. I had set my stops, prepared my limits. Every instinct in my body wanted to throw discipline aside, to double down or flee too soon. But I held to the rules I had written when my head was calm. And that decision saved me. Others, who tossed their plans aside, were ruined before sunrise. That's the paradox. Traders think they'll rise to the occasion in crisis. In reality, they fall to the level of their preparation. Discipline is nothing more than loyalty to your own rules when panic begs you to betray them. A story comes to mind about a man named Harris. He was brilliant, quick with numbers, and sharp as a blade. But Harris had no anchor. When markets shook, he shifted with them. He moved stops, added to losers, chased rebounds. He told himself he was adapting, but really he was surrendering to fear. In the end, Harris wasn't undone by lack of intelligence. He was undone by lack of discipline. The market doesn't forgive lapses in discipline. It may let you slip once or twice, but eventually, it punishes every weakness with interest. That's why I tell every trader, write your rules when you are calm. Follow them when you are terrified. Because the storm is coming, and in the storm, you will not think clearly. It is better to be bound by rigid discipline than freed by reckless emotion. Emotion will promise relief, but discipline delivers survival. The truth is, the market does not demand brilliance. It demands consistency. The trader who sticks to simple rules with discipline will outlast the genius who improvises under pressure. And in the long run, survival beats brilliance every time. Every trader learns this truth eventually. The market punishes arrogance more than ignorance. Ignorance can be corrected with learning, but arrogance blinds you to correction. I once knew a man named Dalton. He was celebrated in his circle, praised for a string of winning trades. Success inflated him, as it does many. He began to believe he had mastered the market, as though prices bent to his will. He increased his position sizes, shrugged off risk controls, and mocked those who cautioned restraint. For a while, fortune favored him. But when the inevitable downturn came, it was swift and merciless. Dalton's pride left no room for an exit strategy. Within months, he lost not just his capital, but his reputation. His story mirrors the fate of countless traders who mistake luck for skill. A rising market lifts everyone, even the reckless. It is in falling markets that true skill is revealed, and arrogance is exposed. I wasn't immune to this myself. In my younger years, a streak of successful trades convinced me that I had discovered a formula for perpetual profit. I ignored my own rules, chased riskier positions, and laughed at the warnings of older traders. The market humbled me quickly. My losses weren't just financial, they were humiliating. And humiliation, I discovered, is the tuition arrogance demands. The great danger of arrogance is that it silences reflection. After a win, you stop asking, "What did I miss?" You stop questioning your own judgment. You start to see yourself as invincible. That illusion is fatal, because the market has no memory of your past victories. Each trade begins at zero, indifferent to your ego. The remedy for arrogance is humility. Not weakness, but a sober respect for the market's power. Humility keeps your size in check, your stops in place, your mind alert. It whispers, "You are only one trade away from disaster if you forget the rules." Dalton never recovered from his arrogance. His fortune vanished, and with it, the confidence of everyone who once admired him. I, however, learned from my bruises. Each scar reminded me, you do not master the market, you only master yourself. The trader who bows to the market's power, who treats every trade as uncertain, who remains cautious even in victory, That is the trader who survives long enough to prosper. Greed is quieter than fear, but no less destructive. It doesn't roar like panic, it whispers like temptation. And for many traders, greed is the voice that lures them off the cliff. I once watched a trader named Lewis transform before my eyes. He began cautious, disciplined, modest in his gains. Each small profit reinforced his belief that he had cracked the code. Soon, small profits no longer satisfied him. 10% returns felt trivial. He wanted 50, 100. He increased his leverage, convinced that fortune favored the bold. For a season, it seemed to work. His account grew faster than anyone else's on the floor. But greed is never sated. It always demands more. One bad turn of the market, and Lewis's fortune unraveled. What took months to build collapsed in days. The cruel thing about greed is that it disguises itself as ambition. Ambition pushes you to grow, to learn, to strive. That's healthy. But greed is ambition's shadow. It pushes you to risk too much, too fast, for the promise of glory. I fell into that trap myself after one of my most successful years. I looked at my profits and thought, if I could double this once, why not again? Why not faster? So I pushed harder, doubled my sizes, stretched my margins. The market, patient as always, waited for me to overreach. When the turn came, my swollen positions turned gains into catastrophic losses. The sting of those losses carved a lesson deep into me. In trading, survival is more important than acceleration. Greed blinds you to risk. It whispers that the rules no longer apply, that you are on a special run of destiny. But there are no chosen ones in trading. The market treats every trader the same, with indifference. The antidote to greed is gratitude. Not complacency, but appreciation for steady, sustainable gains. A trader who respects small profits can build a fortune brick by brick. A trader consumed by greed will gamble the entire structure for one dramatic leap, and more often than not, fall into ruin. Lewis never traded again after his collapse. The shame was too heavy, the debts too deep. His story, like many, is a warning. It is not the absence of opportunity that destroys traders, but the refusal to be content with enough. Fear, impatience, arrogance, greed. I've seen them all, lived them all. And yet, the most dangerous force in trading is not any one of these emotions. It is forgetfulness. Forgetting the lessons you paid for in losses. Forgetting the rules that saved you in storms. Forgetting that the market will test you again, tomorrow, and the day after, until you finally learn. I once met an old trader in a smoke-filled office who told me, "The market is a strict teacher. It will repeat the lesson until you pass, or quit." At first I laughed. But years later I understood. Every time I thought I had graduated from the school of trading, the market presented me with the same exam. Would I follow my rules this time, or betray them again? And that is why I keep journals. Not to record triumphs, but to record scars. Every mistake I've ever made is written in ink, a reminder of what arrogance, impatience, or greed once cost me. Because memory is short, but the market's patience is infinite. I tell you this, the men who last are not those who never fall. They are those who never forget the pain of falling. So, what is the essence of trading psychology? It is not about controlling the market, you can't. It is not about predicting the future, no one can. It is about controlling yourself, your fear, your greed, your ego, your impulses. It is about remembering that survival is the first victory, and profits are the second. If you take nothing else from my words, take this. Your greatest edge is not your strategy, but your discipline. Strategies change, markets evolve, tools improve. But discipline, the quiet, stubborn refusal to betray your own rules, that is timeless. I survived not because I was always right, but because I learned to be wrong quickly and small. I thrived not because I was fearless, but because I respected fear enough to prepare for it. And every fortune I made was built on the back of countless small acts of restraint. Remember, trading is not a battle against the market. It is a battle against yourself. And the trader who conquers himself has already won. So let me leave you with this. The market is not your enemy. It is not your friend. It is a mirror. It reflects back the fear, greed, impatience, and arrogance you carry into it. If you bring discipline, humility, and patience, it reflects those too. What you see on the tape is not just numbers. It is yourself. When I look back over decades of trading, the truth is clear. The rules were always simple. Cut your losses. Let your winners run. Never over-leverage. Wait for your pitch. Protect your capital. Simple rules, but living by them is the hardest work a trader will ever do. I have watched brilliant men crumble because they couldn't follow rules they themselves had written. I've seen ordinary men build fortunes simply because they obeyed discipline when it hurt the most. That's the irony. Success in trading rarely belongs to the most intelligent, but almost always to the most disciplined. And discipline is not a one-time decision. It's daily. It's saying no to the quick thrill, the reckless bet, the whisper of greed. It's saying yes to patience, to humility, to survival. If you want to endure in this game, never forget. Trading is not about winning big once. It's about staying in the arena long enough to let time and discipline build your fortune. So write your rules. Live by them. Let every scar remind you why they matter. Because in the end, your greatest victory as a trader is not conquering the market. It's conquering yourself.